Greetings, members one and all of the Salivation Nation. The markets show little reaction to some pretty big news today. Let's explore that and see where things are heading for gold and silver in the wake of three big news items. Yes, we can see here looking at the markets. Right now, they're going to be closing relatively soon. We've seen somewhat of a reversal as of late. Gold is up 0.44% to $1,476.90. Silver is up 4 cents at $17.04, really based off of some troubling news in one area and also some encouraging news in two other areas. We'll explore some of that. Platinum and palladium have taken a bit of a hit, almost 2% hit on platinum. It's down $16 to $931, still above that $900 level. And palladium is down $12, and it's at a 0.62% drop to $1,938. But I believe we're going to probably see that change, and we could see palladium score above $2,000 and in short order. But here we go. So the gold prices and silver prices have settled higher to score a gain for the week. And here is from Market Watch. A weaker dollar bond yield boosts gold as traders weigh the U.S.-China trade deal. So gold prices settled higher on Friday, buoyed by weakness in the dollar and a fall in the bond yields to tally a gain for the week as traders struggled to sort out the details of the news that the U.S. and China have agreed to a Phase 1 trade deal. So this new trade, this Phase 1 agreement here, on text of a Phase 1 trade deal, and will now move forward signing a deal as quickly as possible, Chinese officials said Friday. The U.S. will scrap tariffs on Chinese goods in phases, Vice Commerce Minister Wang Shouwen said. President Donald Trump said Friday that the U.S. and China agreed to a Phase 1 trade deal and said tariffs that were scheduled for December 15th on Chinese goods have been called off. It certainly is real progress, but the market is cautious of both sides, given we have been this close before, only to have China pull back from an agreed into in principle deal, Jeff Wright, Executive Vice President of Gold Mining, told Market Watch, and I'm of the same mind. Very cautious. Yeah, in fact, as Donald New Mexico said, and I agree with him, until something is actually signed, I'm not going to celebrate. I think the markets are reacting as I would in this case. You see, it's all psychology. We've been told so many different things. No deal, not a deal until election time, and we're very close. It's going to happen soon. Today's the day. This is going to be the day. We're going to think about it. We'll see what happens. We're in a wait and see. We're a holding pattern here. However, gold likely found support from a rewinding to some of the data earlier of the week, such as the Producer Price Index and Wednesday's FOMC policy statement, he said. Against that backdrop, February gold rose $8.90 or 0.6% to settle at $1481.20. It's actually a little lower than that now, the highest finish for a most active contract since December 5th, according to FactSet data. March silver rose 0.30%, meanwhile added 6.3 cents or 0.4% to $17.01 an ounce, logging fifth consecutive sessions of gains. It's below that now. I believe it's $17.04, so it's above that $17 level now. It's higher. For the week, gold rose 1.1%, while silver saw a 2.5% weekly rise, according to FactSet data tracking the most active futures contract, which is typical. That means that silver is more volatile and is going to perform better when things are going well for the precious metals and worse when they're not. Market strategists had warned that the dissipating geopolitical fears, including on Brexit and the U.S.-China trade, remain downbeat factors for the yellow metal over a longer term. Gold is a bit anomalous, as I had initially pegged gold lower on a tariff rollback trade deal, but with the tame U.S. inflation environment possibly keeping U.S. yields in check, gold may not necessarily have the blow-off bottom as a result of the trade deal. wrote Stephen Hines, chief Asian market strategist at AxiTrader, in a Daily Note ahead of China's press conference on Friday. But in the absence of an absolute dovish Fed, downside risk remains elevated as cross-asset relocation in equities could intensify into the weekend even more. So if global growth rebound trade takes hold, he wrote. Now here's the second thing. Meanwhile, UK Prime Minister Boris Johnson secured a decisive victory. In fact, the largest victory since we saw with Winston Churchill or Margaret Thatcher. Late Thursday, that gives him a new 5-year term after the Conservative Party won a general election. In fact, yeah, there were some seats in Parliament that had not been won since Churchill, but that's the most decisive victory since Thatcher. Gold prices have been influenced by concerns about trade and uncertainties surrounding a UK election, as well as the dovish stances by the Federal Reserve and the European Central Bank, which recently expressed support for lower rates for a longer period to support global economies. You know, with this thing, this is pretty much, they're saying, is a mandate for Brexit to go and to occur in January. The recent geopolitical moves, notably the UK election, has pushed one measure of the US dollar firmly lower as the British pound jumped overnight, but was weaker in Friday dealings. The ICE US dollar index was down negative 0.20%, a gauge of the dollar against a basket of half dozen currency rivals, was down 0.2% and 97.181 as gold futures settled. So we'll look at the prices for gold and silver in British pounds here in a moment, because I think that's going to be very interesting to see compared to with what's going on here, with potentially good news in the UK with a path forward for Brexit. A weaker buck can make commodities pegged to the currency more attractive to buyers using other currencies. Meanwhile, bonds, which can compete with gold for buyers, were saying yields retreat some, doubts about the details of a China-U.S. deal. The 10-year Treasury note was down negative 3.85%. U.S. stocks on Friday provided little guidance for the Haven Gold, with a benchmark stock index seeing mixed trading after the news of the progress on the trade deal. So, exactly right, and that's the thing. Everybody's very cautiously optimistic, but these other things, as far as the dollar index and what's going on with China and everything like that, are kind of pushing gold and silver up higher. In fact, let's see here. So here we see them in the U.S. dollar, and we see that both gold and silver. We're just going to look at gold and silver right now. So I think they're the best tied to as safe haven assets is what they do in cases like this. So there they are. They're up 0.44% for gold and 0.27% for silver. Let's take a look at these now in the British pound. Look at that. Still up considerably more. Wow, that's interesting. Indeed. By percentage-wise, they're up even more. So that kind of blows that theory out. I would have thought they would have been cheaper in the British pound. Very strange. Going back to the U.S. dollar, we can see here that in the U.S. dollar, the increase is less than half of what the British pound is, by all measures. Wow. Interesting indeed. So there that is. Now, among other metals, copper fell and platinum fell. Palladium failed to follow through with earlier gains, with the loss pulling back as well. But now we have to kind of take a look and see what's going on in the future here. This article comes to us from Kitco, talks a bit more about this. What's next for gold prices after the U.S.-China trade deal and some Brexit clarity. With the U.S.-China Phase 1 trade deal, December's Federal Reserve meeting, and the UK elections out of the way, what's next for gold prices as the sector enters into a seasonally favorable time of year? Well, I'll stop them right there, because the trade deal is not out of the way yet. Even though we see from this post from Donald Trump here, and we'll read that in a moment, but it's not over till the fat lady sings, or until the ink is dried on the paper. The biggest news of the week is the U.S.-China reaching an agreement on a Phase 1 trade deal. Even though all the details are still a little fuzzy, well, they're not signed yet. In fact, they're saying that this thing was originally 5 pages or whatever, and now it's 7 pages. The deal was confirmed to stop further tariffs from being rolled out, or maybe it was 500 pages and 700 pages. Anyway, it's an increase. It's more complex than what was originally had come to the table, what they were working with. The next steps are legal reviews, authentication, and signing. Those are pretty big steps in my view. They got to get the legal reviews out of the way, authentication, and all that, and a lot can happen. I'm just skeptical about all of this because of what we have been dealing with up and down for the past months and half a year here. The deal consists of some tariff relief, increased agricultural purchases, and some structural changes to intellectual property and technology issues, according to the announcements made by the U.S. and China on Friday. U.S. President Donald Trump took to Twitter saying that the next round of tariffs against China, scheduled to be rolled out on December 15th, will be canceled. Trump added that the 25% tariffs on $250 billion of Chinese imports will remain, while other existing duties will be cut at 75%. So here's what he says. We have agreed to a very large Phase 1 deal with China. They have agreed to many structural changes and massive purchases of agricultural product, energy, and manufactured goods, plus more. The 25% tariffs will remain as is, with 7.5% put on much of the remainder. The penalty tariff set for December 15th will not be charged because of the fact that we made the deal. We will begin negotiations on the Phase 2 deal immediately, rather than waiting until after the 2020 election. This is an amazing deal for all. Thank you. Well, thank you, Mr. President, if it actually happens, as you state, and there's no surprises that could be, negative for the U.S. And no offense, Mr. President, but I'm waiting until it's actually signed for it to be in the case. So we shall see. By the way, as a side note, the president does like to show up on my live streams, which occur at 6 o'clock p.m. on Fridays, Tuesdays, and Sundays. He shows up with a thumbs up, so we appreciate the president showing up there for those live streams. And I have authenticated that it is the real President Trump, so we appreciate that. So he gives a thumbs up to this channel. Moving ahead here, in response, China will consider canceling its additional tariffs against the U.S. scheduled for December the 15th, according to China's Vice President Minister Liu Min. On top of that, Trump said that negotiations on a Phase 2 trade deal will begin immediately rather than waiting until after the 2020 election. So what he said before, and that's just it. This is the posturing that Donald Trump has done that is certainly unorthodox, but we have come to understand Trump's style in this way, and it's really to kind of really tweak all the players involved. It's really interesting indeed. Analysts saw the Phase 1 deal as a temporary measure to stop additional tariffs from coming into effect. As details start to come out, it does not seem like the Phase 1 deal really rolls back tariffs. Ultimately, it's a bubble-wrapped way to delay the December 15th tariffs. There's some minor agreements like the agricultural purchases, but what seemed to have been agreed upon was just enough to delay the December 15th tariffs. Nothing of the sort was lauded to be a Phase 1 trade deal, Blue Line Futures President Bill Barnes told Kitco News on Friday. The Phase 2 trade deal comment from Trump is also a sign the U.S. administration will continue to use trade talks as a carrot when the stock market sells off. And this is important to go through, guys, because of how the effect that it has played on precious metals. Any time there are worries, they will dangle this carrot for a Phase 2 deal now because the idea of a Phase 1 trade deal worked so well, Barrage added. So the Fed's long-term view supports gold. Another major piece of news that will help gold into the year end is the Federal Reserve keeping rates unchanged, still sounding dovish enough, which will prevent gold from selling off too much. The Fed was supportive for gold. They were in line for a dovish narrative to be patient. U.S. and China haven't solved anything, so lingering uncertainty will be out there, which favors a dovish narrative from the Fed, Barrett said. which kind of contradicts the beginning of this article, but I digress. Gold is holding up fairly well due to the fact that the Fed made it clear that it is unwilling to hike rates into the near future. Investors aren't willing to sell gold too far off because of asymmetry in the Fed's reaction function, meaning that if growth worsens, they are certainly willing to cut. But if growth and data continue to be okay, it seems like hikes are off the table. This means that real rates will continue to move lower and will continue to be a good environment for gold regardless, said TD Securities commodity strategist Ryan McKay. The repo market is something to keep an eye on going forward, said RJO Future Senior Strategist Philip Strabel. The repo market is something to keep an eye on. The Fed is really stepping up the plate with regards to the repo market, and it seems like the liquidity crisis is getting a little bit bigger than what we have been seeing. So that is a concern, and that is another thing that could probably support gold. Markets will also be digesting the huge win by Boris Johnson's smashing election victory, and the Conservative Party receiving 364 seats and the Labour Party's 203. That's decisive. It's the biggest majority for the Conservatives since Margaret Thatcher in 1987. We will get Brexit done on time by the 31st of January. No ifs, no buts, no babies, no maybes, Johnson said on Friday. And I say, and I'm sure I probably speak for a lot of Britons, it's about time. Yes, indeed. It's about time. Long overdue. Now, the next part of this says the yellow metal seasonably favorable time of the year begins in a week. December 23rd, according to analysts who are anticipating a year-end rally similar to last year. So around this time, gold and silver seem to be tepid, but once the holiday gets into gear, they're saying that it's going to go up like last year. Gold has done very well in forming a bottom. We continue to battle 1460. This is construction. This cannot go unnoticed. This is strong technical support down here as we are rolling into seasonally bullish time of year, which starts about a week from now, Boris said. Overall, the technicals are supportive. There's a lot of uncertainty still out there. I think gold should trade higher, but there needs to be more of an immediate term catalyst. And without going into this a whole lot more, we're seeing kind of a push-pull type thing with gold and silver to an extent too, with some good news that should bring the prices down, stability, with the more hopes of a trade deal, but people are optimistic. The markets are actually, in my view, acting rationally in that regard. But because of the strength of the pound, because of the elections of Boris Johnson in Parliament, that has put pressure on the dollar. And so the metals have gone up a bit here. Not a whole lot, but just enough to take notice there. So it is interesting to see how these markets are playing. Very difficult to predict, but fascinating nonetheless. Certainly worth talking about. And it just goes to show you that gold and silver really, and especially gold in this case, is kind of performing as they really should in times like this. That's safe haven. For a weaker dollar, a stronger pound. And look, it even is up even more in British pounds. So it's interesting to see why there. But there it is, the news for the day. A lot to digest, a lot to take in. But I do think it's a bullish in a sense for gold and maybe even silver to some point as we get closer to the end of the year here. So there you have it. I'd like to extend a multitude of gratitude to you all for watching. Remember, I do post videos on a daily basis. And I would like to encourage you to please rate, share, comment, and subscribe. I forgot the third item. Yes, you were probably wondering what happened to that third item with almost a 20-minute video here. Well, it's only worth mentioning just briefly because it really is kind of a dud. That's the impeachment. That's right. The impeachment articles have been passed through the Judiciary Committee, very weak, and they will go to the full House next week. But the markets are reacting very little to that as well. I think most Americans and most in the markets have pretty much thought that this is pretty much a dud, And even though technically it is, we will have our third impeached president. And you can't count Richard Nixon because he was not actually impeached. He left office before it went to the full House vote. But regardless, this impeachment thing is the weakest articles of impeachment in history, and it's pretty much predicted as what's going to happen. If it goes to the Senate, he's going to be acquitted or found not guilty, will not be thrown out of office, and will actually help his poll numbers, believe it or not, and already has. So that's why I kind of forgot about it. Not much to say about it, and then the markets are not doing a whole lot or not reacting much to it either.